Hello everyone, today is October 18th of 2023, and today the Bitcoin price is at about $28,300. I did buy some Bitcoin again today, like I usually do. Today I just, dollar cost average like I continue to do. And today, the video I wanted to talk about Bitcoin versus gold. I know last video I was talking about Bitcoin versus real estate and how over the next century we will see Bitcoin outpace the gains from real estate. And I did mention gold in that last video, and today I wanted to dive deeper into Bitcoin versus gold. And I do have some notes here, so it should go pretty smoothly today. Today I wanted to just talk about a couple things, just briefly go over the history of bartering, transactions, the inflation rate between both gold and Bitcoin, transportation in terms of gold and Bitcoin, as well as levels of centralization/decentralization. So obviously gold has been a reserve currency for thousands of years. Gold has had 6,000 years of history as a monetary good. So, for civilizations, and ever since way back, you can go way back to the beginning of time, really, humans have been using gold for transactions and storing value and all that. Now, there have been, in history, there have been civilizations that have collapsed because they fell off of the gold standard. If you read the book The Bitcoin Standard, which is definitely one of the most famous books in the Bitcoin community, a lot of people will tell you to just read the Bitcoin Standard. There are a lot of examples of, people of power taking advantage of fiat currencies and the unlimited nature of fiat currencies. I don't really remember the name of the island off the top of my head, but there was an island that used stones as a means of currency, and when the European voyager, they reached that island, they realized that they can take stones from different islands, bring them over to that island, and arbitrage that opportunity. So if you mine up stones from a different island and you bring it to the island in which it is used for currency, now you have a lot of currency units, and then you can spend however you please. But the problem is, the more currency units there are now, it makes all currency units less valuable, because the amount of value itself is the same, but you just increase the units of currency. So in order to price in the value, there's going to be everything is going to cost more, if that makes sense. So obviously with gold has been the closest thing to an object that is not unlimited. With gold, there is a inflation rate of about 1% per year. So each year, the amount of gold on Earth increases by about 1%. And, that's a pretty steady inflation. But with Bitcoin, as of right now, the inflation rate, the amount of new Bitcoins coming into circulation as we speak right now is about 1.5%. So it's about the same as gold. But the thing about Bitcoin is that there's a maximum of only 21 million units. So with gold, we do not know how much gold there is left to be mined, but each year we mine more and more, and we inflate the supply by 1%. With Bitcoin, every 4 years there's a halving event in which the Bitcoin reward per each block mined gets cut in half. So right now it's a 1.5% inflation rate with Bitcoin, but as soon as April of 2024 comes, which is in about 7 months or so, we're going to see that cut down in half. So it's going to be, the inflation rate's going to be like 0.75%. So it's going to become officially more scarce than gold, because each year, gold's going to inflate by 1%. By next year, Bitcoin is only going to be inflating by 0.5% or 0.75%. And then in 4 years from then, it's going to cut that in half too. So it's probably going to be like 0.25% to 1/3 of a percent of inflation per each year, and it gets more and more scarce until the year 2140. Once the year 2140 comes, then there will be no more Bitcoins to be mined, and all Bitcoins will be in circulation, all 21 million. So that's the difference between gold and Bitcoin in terms of its scarcity. Although gold is scarce, Bitcoin is fixed. Now, for the past 6,000 years, the closest thing we've had to, a scarce supply or fixed supply is obviously gold. It's a precious metal, and it's hard to mine, all that stuff. So that's why we've used it as, a means of transaction. Now, before gold, we were bartering. We would trade direct items for direct items. The problem with bartering, obviously, is if you specialize in one thing. Let's say that you are an apple farmer, and then your neighbor is a chicken farmer. All right, so he harvests chicken meat and eggs and all that stuff, and you want to trade your apples for some chicken. Let's say you wanted a certain amount of chicken, let's say a week's supply of chicken, but what is a week's supply of apples? Or better yet, you could say that a chicken or an egg is more valuable than an apple. So you would need an abundance of apples to pay for this chicken. If you want bulk chicken, you would have to have a truckload of apples ready to pay this man. But the problem is he doesn't want a truckload of apples. He doesn't have any need for a truckload of apples. Or let's say, you're a pear farmer and you want to trade for beer or something like that. But the beer vendor, he doesn't even like pears. So why would he ever want to transact with you? He doesn't want pears. So that's where the medium of exchange comes in. That's where gold comes in. Gold is that medium of exchange where, you sell your whatever good you're selling, and then you receive gold, and then the gold you can use to spend elsewhere. So gold is about $2,000 per ounce, or I believe right now it's probably... Yeah, it's about, $19.50, $2,000 per ounce. Now, what happens when you want to buy something that's worth $10? You can't shave off, you can't shave off the gold like that. It's not very practical, and that's why people have been using silver in terms of, the smaller transactions throughout human history. Whereas, gold has been used more of as a store of value and all that. But what's very interesting about gold, as I'll show you here, is that when you look at it at all time, let's see if it'll load, you can say right now gold is the most valuable it's ever been in history. But this is in terms of US dollar, and as you know, US dollars, they get they lose more value by the day because, the Federal Reserve prints unlimited amount of them. So, it is going up, but, just like the S&P is going up. But when you compare the S&P to the amount of money in circulation, like I showed you with the last video, it's really just a sideways channel. Let's see if I have gold. Do I have gold divided by money supply? Yep, this is gold divided by money supply. It's pretty much the same thing, just a sideways channel with obviously the big inflation from the 80s. But yeah, it's just a sideways channel as well. If you see the price of gold to Bitcoin, let's see if I have that. I don't even know if I have that or not. Yep. So this is the price of Bitcoin in terms of gold. So as you can see, gold, if gold gains value over Bitcoin, this chart will go down. But as you can see over the macro scale, it continues to go up and up and up. So gold is being devalued by Bitcoin. In terms of inflation, we already talked about inflation. In terms of transportation, though, if you wanted to move your gold across borders, it'd be very difficult. It'd be very expensive. If you had, a ton of gold bars taped around you and you try to get through airport security, they're going to confiscate your gold, and there's nothing you can do about it. You will not get your gold back. Whereas with Bitcoin, if you want to fly from country to country, from state to state, however, they cannot confiscate your Bitcoin. And, you'd be best off not even letting them know that you have any Bitcoin at all. With gold, it's very hard. If you're going to transfer it across borders, and if you're going to transfer it across TSA, it would be very difficult to hide your gold from them because they have metal detectors. and they would question you, they'd assume that you're money laundering, etc. So if you needed to flee any corrupt government, I know that they've done it with gold, but it's considerably more difficult compared to Bitcoin. With Bitcoin, you can hide the keys in your brain, and they can tie you up and torture you. As long as you don't give it up, they can kill you, and they will still not have your coins. And when France came to the United States, when they came to New York to take back the gold that was theirs, that cost a lot to send over a bunch of people, a bunch of personnel on these large ships, with weapons. This is a very expensive operation just to take back gold that is supposed to be allegedly yours. But with Bitcoin, you can transfer billions and billions of dollars worth of value for less than a $10 fee, and then it'll confirm in 10 minutes. So the transportation, Bitcoin clearly has that. You cannot transport gold through cyberspace like you can with Bitcoin. And another thing is that Bitcoin is much more decentralized than gold. With gold, the only way that you actually own gold is if you physically have it in your hands, or you physically have it in your own vault or whatever. If you hold gold with a custodian, or you even hold it in a safety deposit box within a bank, that's not really yours. That's you're letting this large entity look over this gold, and then they just give you a credit. That's not, but when times get tough and everyone lines up at the bank to withdraw their funds, take their stuff back, they're going to be out of luck. And that's what happened with the Great Depression. So with banks in general, when you have a balance in your bank, right? Let's say that you get paid by your job, and now you have, let's say, $3,000 in your bank account, and you see that you don't actually have $3,000. The number that you're seeing on your screen is how much the bank owes you. In terms of who has the money, who has the gold, it is the banks that have the gold. And when times get tough, they will find any reason to not give you the gold that they owe you. So $3,000 in Chase, that is not your money. You don't have $3,000. Instead, Chase Bank owes you $3,000. So you're not holding it yourself. That's not self-custody. With Bitcoin, if you hold it in a hardware wallet, you are the one that is holding it. Coinbase is not holding it for you. Celsius is not holding it for you. Binance is not holding it for you. And all these entities, they can just freeze your assets whenever they want, as we learned from BlockFi, Celsius, FTX. So that's that. But yeah, there's, I really do believe that gold will be demonetized over time. And I've heard arguments where, well, gold has value because there's actual utility behind it. You can use it as a conductor. However, that utility, that only accounts for about 10% of gold's value, and the other 90% is a monetary premium. The other 90% of gold's price is due to its monetary premium, its scarcity. It's not due to its utility or its ability to conduct electricity. That accounts for only 10% of gold's value. So if gold is $2,000 right now and it gets debased and everyone flocks to Bitcoin as the new store of value, and if people leave gold for Bitcoin, really, you would see gold go from $2,000 to $200, and the $200 would be justified due to, gold's actual utility, like everyone is arguing. So, to argue that gold is more valuable than Bitcoin due to its ability to conduct electricity, that's a false argument, It's a false argument, just like trying to say Bitcoin is bad because it uses more energy than this whole entire country combined. But in reality, if you look at how much energy the centralized banking system as a whole uses, Bitcoin only uses a fraction of the energy that the centralized banking system has. And if the whole point of Bitcoin is to overthrow the centralized banking system and give the power to the people, give people the power to hold on to their value without having to trust a corrupt system, Bitcoin can easily overthrow that. Bitcoin is better than a centralized banking system and it uses less energy. So Bitcoin is actually a productive use of energy. It's better for the world, and it's only a matter of time until people actually figure that out. If you look at, people's criticisms of Bitcoin back in 2013, 2014, all of it is just fear, uncertainty, doubt. It's all FUD. And I noticed that as years go on, as more and more years go on, the FUD continues to get debunked. There's nothing that has changed with Bitcoin ever since its inception. Bitcoin has been the same ever since the beginning. It is just that more and more people are realizing that Bitcoin has the answers. No matter what type of FUD you throw at it, there's always going to be an answer to the FUD. If you look at the arguments that people have against Bitcoin, typically you'll see that it's not quality arguments. These points that these no coiners are coming up with, they get debunked every single time. But when you hear, a Bitcoiner's arguments for Bitcoin, it's very hard to actually debunk it once you really do your research and you study what's going on. I have yet to hear a convincing argument from a no-coiner. Every single no-coiner's argument about Bitcoin, whether it's energy, whether it's has no intrinsic value, this, that, there's so much evidence for it to be shut down, and if you just spend enough time to research whatever FUD question you have about Bitcoin, you will find the answer on the internet. Don't be questioning me about, what about Bitcoin, this problem, that problem. Just whatever problem you have with Bitcoin, just type it in Google and you will find the answer. You will find why that's not a valid argument. And it's just a matter of time until, people figure it out. You see Larry Fink, the CEO of BlackRock, he goes on the news and he says, yes, this pump in Bitcoin that we saw a couple days ago, he doesn't think that that's due to, this or that. He says that it's due to people fleeing a flawed system for a more quality system. This is Larry Fink, the CEO of BlackRock, the largest asset manager on earth, So this is your opportunity to hop in before the ETF gets approved. I mean, everyone comes to their senses eventually. Matthew Crowder of Bitcoin University, one of the most popular Bitcoin maximalists on the internet, he started off hating Bitcoin and being very skeptical of Bitcoin for his first 10 years of Bitcoin's existence, and now he's the ultimate Bitcoin maximalist YouTube channel. He's one of the more credible YouTubers in the space, and he's bullish on Bitcoin. In 2013, there have been tweets by Michael Saylor, CEO of MicroStrategy, criticizing Bitcoin, and it wasn't until 2020 that he finally realized that Bitcoin is the answer to fleeing the corrupt monetary system. And Matthew Crowder said it best in one of his latest videos. He says that it's okay to be wrong for 10 years, but the problem is staying wrong. I think especially with Bitcoin, when you choose to stay wrong, it's not because you did your research. It's due to pure ignorance. It's due to pure, you do not want to put in the work to understand Bitcoin. You have this predetermined decision to not you have this predetermined decision to not learn about Bitcoin because for whatever reason. I don't know if it's because people are salty that they didn't get in early or this or that, but in reality, on a macro scale, this is early. Sure, it's not $200 per Bitcoin, but this is early. Why do you think every single 2 weeks that I get paid, I lump sum everything I have? Like this is it right here. So, all right, that's everything I wanted to say with this video. I think this was a pretty good video, and I will just keep on making these videos, and I will just keep on writing notes. I think this was a good one. Sure, I went off topic a little bit, but I think for the most part, it's a good video. And yeah, please like and subscribe, and share this video. Do whatever you need. Keep dollar cost averaging, and I will see you guys in the next video.